Welcome to the Plan Solutions Incorporated podcast, where we give facts and insight on the latest happenings in the world of economics, financial markets, and personal finance. Plan Solutions provides advice on a variety of financial topics, including investment management, tax preparation and planning, and retirement planning. Chase has 25 years of experience in the financial industry, holds a certified financial planner and chartered financial analyst designations, and has earned a master's degree in taxation and a doctorate in business administration. Chase has a passion for helping clients down the path toward their financial goals. And I'm Jason LaChance, and on this episode, we're going to discuss Coast Fire movement, changes to real estate commissions, is gold a good investment, as well as a look at the Plan Solutions Incorporated office bulletin board. Mr. Armour, how are we, good sir?
Doing well. Yeah. Keep thinking that fall weather's going to come, but summer just won't let it go. It's been hot, but I'm okay with that.
Yeah, that's true. I mean, maybe a little more time out on the golf course this year.
Yeah, I mean, I do like fall, but when you start getting the wind and the rain and everything, it does kind of keep you locked up inside.
Yes, sir. Well, we've got great topics, so let's dive right into Coast Fire movement. And no, we're not talking about natural disasters here. We're talking about fire, financial independence, retire early. We've seen a lot of this where younger people looking to retire a little bit early, or I've known a few people who've retired in their late 40s, early 50s. What do we really kind of want to shed light on here?
Yeah, I think we talked about this quite a while back. I think it was pre the drop in stock prices, especially kind of the really aggressive tech stocks that dropped a lot in 2022. But we seem to, coming out of COVID, when the market recovered and was really strong, the fire movement really gained a lot of popularity, right? A lot of young people saying, okay, I'm going to live super frugal. I'm going to save everything. I'm going to, invest aggressively with the goal of, building up these sources of passive income so you can retire as early as possible. And then, when you have the time, you'll actually kind of live your life and maybe spend a little bit of money. Maybe it was partly the difficult market in 2022. Maybe it was partly just people realizing, it's very difficult to achieve, right? A lot of young people don't have enough discretionary income that they can achieve a really high savings rate. In some cases, they were really pushing the limits on risk, trying to invest very aggressively because of that, which, can work over certain time periods, but then over other time periods really works against you, right?
Right.
And seeing that in 2022, I think that was part of a realization. And then the other challenge is you just don't have enough time to accumulate wealth. So much of it is just that compounding of returns over time that allows people to save large amounts for retirement. So you don't hear a lot about the fire movement anymore, but now it's maybe become a little more moderate view of how to approach it with what they're calling the Coast Fire movement, which I actually think makes a lot of sense. It's not as extreme of very high austerity in your early years in order to, have more freedom with your time and later on. But it's more, still targeting building a sizable nest egg so that you get that benefit of compound interest or compound returns over time, right? Getting, early on, trying to really get ahead. And then once you're ahead, as long as you're, investing in a more reasonable type of portfolio or investment strategy, you're getting the benefits of that money compounding. So it really helps you stay ahead. Now, maybe it's not going to get you so far ahead that you can retire in your 40s or even 30s or something like that. But it really does or can give you a lot of financial freedom later in life as you determine, how much you want to work, where you want to work, what responsibilities do you want to take on in terms of compensation, and just have more options available.
Yeah, it seems to me that the approach with it is far more pragmatic to the other approach, and incredibly reasonable, and I think well thought out. And maybe it's a part of that shift that more younger people are wanting to become more financially literate and prosper, and to see that there are opportunities to prosper no matter what your income is.
Yeah, I think it's more balanced, and I think that is a good thing. It's as with anything, as you're earning money, it's kind of okay, that balance between standard of living now, standard of living later. And a lot of, the psychology around money shows that, people like getting used to kind of a reasonable standard of living. They don't like it, going down. That's one of the, most difficult things. And of course, the risk is if it goes up significantly, there's the risk that it'll then have to be adjusted downward. But keeping it on more of a, slow and steady trajectory makes a lot of sense. And, it still highlights the benefit of trying to, save a lot early, get a strong financial foundation, which not only could create more flexibility and financial freedom, like we said, later in life, but also could be really important in dealing with risks or challenges that may come, right? Loss of employment. If we see disruptions in the industry that you work in, or all of those things, having that strong financial foundation can help you get through those difficult periods without really digging a deep hole that, now you're behind and you have to try and work your way out of.
Yeah, well, and it seems to me it lends the opportunity to create a very reasonable baseline of living that, like you said, if something unfortunately happens, maybe that drop off isn't too much. But, if you're prospering, you're planning properly towards your retirement, investing, it's not a huge amount of savings. And as you said here, it still allows the flexibility for time with your family vacations, passions maybe outside of your career path and things of that nature. So it's just more of a well-balanced way of approaching life as you go through it.
Yeah. Yeah. And I think that's part of the appeal here, right? That it's not, really sacrificing for long time periods to potentially see a benefit down the road, which may or may not come. And with the original FIRE movement, that potential was so based on trying to get high investment returns by taking significant risk. And a lot of people don't realize that, yes, that will work for some people in some cases, but in many cases, if you start taking risk above and beyond just kind of the traditional stock market, outcomes often, are reduced,
Yeah.
right? It's kind of complex, and I won't go into the how the math works, but it's becomes more and more attuned to gambling versus a long term sustainable investment strategy, right? And we did see a lot of that coming out of COVID with the investments in GameStop and AMC and Hertz and a lot of these really distressed companies where arguably the real business value was declining and was not significant, but the stock price was, made it look like these companies were thriving and they were really big companies. And it was about, trying to invest in those types of things that was more taking advantage of the herding mentality among investments rather than a long-term sustainable strategy. And if you're, just investing in things because they're popular, because people are buying into them, as with any fad, it can change very quickly. And if you're, not quick enough to see that sea change and make adjustments, you could end up actually, giving back those profits or even taking big losses. And then not only now do you not have that strong financial foundation, you're not even on track for where you should be at the point of life that you're at.
Yeah. Well, and fads all too well. We've been friends a long time, and you know how I dressed in high school. That went out pretty quick. So, they come and go. And for me in reading this, I live comfortably. I'm very fortunate in the grand scheme of the world, but it's I like when this stuff is put out in the personal financial review because it reminds me to keep it in perspective, and I think sometimes that can get a little bit lost.
Yeah, yeah, and I think there's nothing wrong with trying to get ahead of where you need to be because we've talked about in the past a lot of people when we do retirement planning they retire. Okay, I want to retire at this age. Well, you may not have that choice. If we go through a tough economy and you get laid off, maybe you're late enough in your career, it's going to be hard to start over somewhere new. well, if you've used this type of strategy and really benefited from the compounding rates of return, maybe then you're at a point where, okay, you're forced to retire a few years earlier, but it doesn't really affect your overall standard of living because you put yourself in a position to be ahead of the game so you could handle those unknowns or those risks that may arise.
Yes, sir. Anything else we want to add before we go to changes to real estate commissions?
Well, just that if this is something that people are interested in, I think, there's lots of opportunity to develop that into a plan, right? And figure out, okay, where can that savings come from? What's a reasonable investment strategy? What's a reasonable timeline? And then, if they're willing to really put in the effort over, several years to build that up, then they can make that a fruition.
Yes, sir. All right. Changes to real estate commissions. A recent court ruling may make buying or selling real estate a bit more complicated. What are the ins and outs of the court ruling, and why are we seeing that shift to making it maybe a little bit more difficult?
Yeah, so basically, the National Association of Realtors was sued for monopolistic behavior, basically price setting, right? And which is interesting because whenever any industry group gets together, it's very clear you can't talk about pricing, right? If I go to a tax seminar, the thing they never talk about is what you charge. Because you can't have a whole bunch of people in the same room, right? Colluding is to try to keep their fees high. Same with investment management or any other industry. But it was always within the realtor world very constant, that 6% commission that the seller pays, right? And sometimes it would fluctuate. Maybe the norm in a certain area would be more like 5%, especially if they're very high end real estate, very expensive. But usually it was around that 6%. And that was paid by the seller and split between the two agents. But with the new ruling, now, it's going to place more responsibility on the buyer because it's going to be the buyer's responsibility to pay the agent commission. So it is going to create some changes when people are looking to buy, and even to an extent to sellers, because obviously they're not paying both sides. Or may not be paying both sides going forward.
Yeah. Well, what are I mean, as we break down the three key changes, what are we really seeing with that? I mean, this is obviously we need to compensate the agent, with their commission percentage, but is there a big that shift there? Does this really make it that much more less appealing as a buyer and a seller? Is it the struggle for the seller that now the buyer, it falls solely on them? So, some of these investments might become less appealing?
Yeah, it's going to be interesting. I mean, we're going to have to see kind of where the norms end up, right? As we see this shakeup. But I think there's three key changes. So, one is buyers now will need to negotiate and pay their agents commission directly. So they need to figure out what that will be. Now, sellers may offer to cover a portion of that commission, though. So it's no longer kind of the automatic custom, but it may be something a seller chooses to do to make their home more desirable to buyers. Two, buyers will now need to sign a written agreement with their agent that defines that compensation up front. Right? I mean, in the past, maybe you were just not even that interested in moving, but you saw a house that you liked. You talked to an agent so you could walk through, and then maybe you say, well, this isn't quite right, but what about the one down the street? And next thing you know, you have this relationship with this agent. You start thinking, yeah, it would be nice to move. It could be kind of informal like that, right? But now you're going to have to actually, hire that agent to represent you as the buyer. And three, the compensation details or the agent's percentage will be removed from the multiple listing service. So it's created so that there's not the transparency as much, which on the one hand, could be a good thing for buyers and sellers, but it's really designed so that, again, agents can't just look at what other people are charging and match it and continue that, what was argued to be monopolistic behavior.
Right, right. Yeah, it makes it definitely for a different change of structure there for sure. And I don't know, potential conflict of interest eliminated, do you think? I mean,
I think it could, yeah, because, based on the previous commission structure, basically the buyer's agent had an incentive for, to make a higher offer, right? And pay more because their commission was based on a percentage of the final sales dollar amount, which, that could be a conflict with the buyer's interest, which of course is probably to secure a lower price. So the new system is intended to address that by making that more transparent and negotiable. But it remains unclear how flexible agents will be in those negotiations and how much commission rates may vary by location.
Sure.
Again, that 5 to 6% commission was not set in stone. I mean, anything was negotiable before. It's just I think a lot of people didn't realize that, and because of that, a lot of agents were much less willing to budge. But this is something people could have done before. Now it's just a little more clear to them that they have the ability to engage in those negotiations.
Yeah, no, that's incredibly helpful. I'm in my second home and I did not know that.
Yeah, yeah. I mean, I've seen it in cases. It usually kind of depends, but if you have a house that's sat on the market for a long time, and especially if, let's say, the buying agent and the selling agent are the same person, there's historically been a lot of wiggle room that people weren't aware of because they're getting both sides of the commission. And if the house has been sitting, they're probably just wanting to be able to get it sold and move on. The seller's happy and the buyer maybe gets a little bit better deal. So it will be really interesting to see how maybe the norms adjust with these changes.
Yeah. All right. Anything else you want to add?
Just that if people read this, and I would be interested for any feedback people have on what's actually happening out there. Obviously, buying and selling real estate is not something you do very often, and a lot of people may just have one or two data points. But it would be interesting maybe to get kind of a wider scope of what people actually experience.
Yeah, absolutely. All right. Hey, this is a great one here because, I mean, we see the commercials all the time. Invest in gold, invest in gold. Is gold a good investment?
Yeah, and that's always a tough one to answer. I've never been a big fan of gold for a variety of reasons, and we've done a number of special reports in the past, kind of outlining, I think, some of the challenges there. But gold often, does well during periods of actual or perceived economic or political uncertainty, and definitely that's kind of where we're at right now, which is probably why you're seeing a lot of those commercials in terms of people worried about political uncertainty. And that's because gold is generally viewed as a safe haven. It's something that people buy to protect their savings and hedge against inflation, which, we're coming out of a period of high inflation. And then some people just like actually owning a physical, tangible thing, right? Not an abstract claim on future cash flows or ownership of a business, but something they can actually, touch, hold, feel.
I know you said you're not typically a fan of. I mean, I would see it potentially as a way to diversify one portfolio, but I mean, I've also seen it where it sounds like some people go all in as well, and that there's always dangers to that.
Yeah, exactly. That's usually what worries me the most. I mean, a little bit of gold as a percentage of a diversified portfolio can offer some real benefits, right? Because a lot of times it doesn't necessarily go down during periods of economic turmoil when other assets do, and then that can be an opportunity to take profits and shift into other assets while their prices are lower, and vice versa. Periods where gold is doing really well or other investments are doing really well. Maybe you take some profits and you put it into something like gold. But there definitely are some disadvantages. I mean, one is, gold may be subject to adverse tax implications since it's typically taxed as a collectible, which are taxed at a higher tax rate. Of course, it's illiquid, right? It can be fairly costly to buy or sell it because you're usually paying a commission on each transaction. Historically, returns have been more in line with the rate of inflation. So it's not really building wealth over the long run. Now, there's periods where it's gone up and period where it's gone down pretty dramatically. But if you look at long holding periods, the returns haven't been real strong. And meanwhile, you've got higher volatility compared to a lot of other investment vehicles. I mean, if you look at the long run, gold has offered the rate of inflation, which has basically been about half to a third of what the stock market has returned, and gold has exhibited three times the volatility.
Hmm.
If you go back to the 1980s, when gold was hitting close to $1,000 an ounce, and then fell to $250 an ounce and stayed there for 20 years. There's not many investments that have had periods of performance that bad.
Wow.
So there is still significant risk, even though gold is often viewed as being lower risk. So people need to take that into account when they're looking to make these decisions. And like you said, some people, going all in because they think it's the one safe haven. Well, obviously, if they experience those returns from 1980 to 2000, let's say, that would not be a way to get ahead for longer term financial goals.
No, sir, does not sound like it. Well, and you pointed out something really important here that, once again, one of the great benefits of subscribing to the Personal Financial Review, I wasn't aware that it was assessed at a higher tax rate as a collectible. I mean, I know that and you point this out here too, that um, sometimes families treat it as an heirloom and part of family traditions and celebrations. And, I think that's a really important thing for people to pick up on.
Yeah, I mean, something like jewelry or maybe other ornamental uses. Because gold often, even if it's jewelry and things, you may pay a higher price for it based on the craftsmanship. But often when you go to sell, you're basically getting the base gold price, right? So
Right.
it may or may not go up in value, even if the price of gold goes up because you paid that premium to start. But even if it does go up, then yes, okay, you're potentially have a profit, but then you're paying a higher tax rate. So you kind of have multiple things working against you there. And then, of course, the other challenge of anything tangible is just making sure that you're storing it in a safe place, right?
Right.
How secure is it going to be if it represents a significant investment? And that can come with its own costs of making sure that it's not subject to loss or theft or something like that.
Anything else you want to add before we take a look at the bulletin board?
Well, if someone's really interested in gold, like I said, it's been a while since we've updated our analysis on gold and kind of how we look at it, but it's a conversation we're always willing to have.
All right. Well, let's jump right in. We got two items pinned up on the bulletin board. What's the first one there, Mr. Armour?
Well, Daryl recently volunteered at Sac State. They have a financial planning wellness center where peers, really students that are in the financial planning program, coach other students on financial issues. And because it's students, it's kind of primarily a student to student thing. They do often ask certified financial planner professionals to at least kind of mentor or shadow the students just to make sure that the advice is sound and they're not making a mistake or something like that, since they are fairly new to the profession. But it sounded like it was a big success with a number of volunteers as well as students coming in on all different topics, ranging from budgeting to credit card management. Student loans, of course, is a big one, but also longer term goals like retirement and investment. So it's a really neat program that Sacramento State has there, and I think it's great that Daryl could take some of his time to help these types of things happen.
Absolutely. What's the second item we have pinned up on the bulletin board?
Well, here we are in October, which means anyone who filed for that 6 month automatic extension of time to file their tax return, we're coming up against that October 15th deadline, and there is no extension beyond the extension. So that is the definite deadline by which a tax return needs to be filed. Otherwise, underpayment, late filing, all of these other things can kick in. So we just want to remind anyone, if you haven't filed your income taxes, you should probably get started on it as soon as possible. A lot of times there's you may start getting into it and find there's missing documents, either because you didn't receive it or you misplaced it. If you received it in February and here we are in October, it's pretty easy to misplace things over that time period. And it sometimes can take quite a while to get those documents replaced. And I've had multiple times where we're coming up against the October 15th deadline and the client's unable to get the information they need to file their tax return. And, they say, well, isn't there an exception or an extension for this situation? I said, well, you got the extension. That's the problem. You had 6 months. So yeah, just want, people to be aware of that. And if there's any questions or, maybe investment documents that are missing, by all means, they can contact us. We're happy to help as best as we can. But with such a short time period, it starts to get challenging.
Yes, sir. Absolutely. Anything else you want to add, Mr. Armour, before we wrap up this edition of the Plan Solutions Incorporated podcast?
Just, we're just gearing up for our golf tournament coming up in a week or so. So hopefully that goes well. We want to thank everyone who donated and helped to support it. And, I'm sure in the next podcast or maybe the one after, we'll kind of give an update of where we're at and how it went.
Absolutely. Well, we thank you all for listening to the Plan Solutions Incorporated podcast, of course, on Apple Podcast and Spotify. We'd appreciate not only if you subscribe, if you haven't already, but leave us a rating and a review. And you can now watch along on YouTube, where you'll get an animated video following along to the personal financial review. And you can get all those links at plansolutions.com. And if you want to subscribe to the personal financial review, the content that we discuss here on the podcast, send Katie an email, katie@plansolutions.com, and get subscribed today.
The views and opinions expressed in this podcast should not be construed as an offer to buy or sell any securities. The information may not be current, and Plan Solutions has no obligation to provide an updates or changes. Plan Solutions does not make any representation or warranty as to the accuracy or completeness of the statements or any information contained in this podcast or any liability therefore, including in respect of direct, indirect, or consequential loss or damage, is expressly disclaimed. Plan Solutions is not providing any financial, economic, legal, accounting, or tax advice in this podcast. In addition, the receipt of this podcast by any listener is not to be taken as constituting the giving of investment advice by any Plan Solutions associate or individual to that listener, nor to constitute such person a client of Plan Solutions. Any reference to a specific company or security does not constitute a recommendation to buy, sell, hold, or directly invest in the company or its securities. Market indexes are unmanaged and cannot be invested in directly. All price references and market forecasts correspond to the date of this podcast.
Plan Solutions is a registered investment advisory firm.